A big day for India indeed. The Indian Finance Minister Nirmala Sitharaman is about to unveil the first ever digital-only budget for the financial year 2021-22. And this year's union budget assumes special significance in the wake of the coronavirus crisis, of course. Today's will be a budget of many firsts. The first time in the history of independent India that the budget papers will not be printed. The Finance Ministry has decided not to print the budget documents in physical form, this time around amid the pandemic scare. It will be digitally most accessible of a union budget of all time, available online on the Union Budget mobile app. As Indian Prime Minister Narendra Modi's government tries to bring the country's economy back on track, the government has promised a game-changer of sorts of plans to boost economic growth. For an economy facing its worst contraction in decades, the recovery of demand should remain a key focus to reclaim economic recovery. The Finance Minister will also have to revive declining revenues and restore millions of jobs lost during the crisis and the lockdown earlier last year. Amid the massive health crisis, the healthcare sector also merits special attention, and looking to fix the shortcomings exposed by the pandemic, the government may expand the Ayushman Bharat initiative, and experts are hopeful of healthcare spending being doubled in the next fiscal year. The total expenditure in the healthcare sector might also be raised to 4% of gross domestic output in the coming 4 years. A dedicated health fund could also be set up as part of the plan, while the government could also increase the health tax to fund the new program. The Reserve Bank of India is now expecting a sharp rise in bad loans in the banking system due to the pandemic, and creation of a bad bank could finally be announced by the government. The move will aim to boost lending and improve the valuation of state-run banks before selling stakes in them, where bad assets of state-run banks could be parked and later sold at a discounted price in the market. India has also set a target of building infrastructure worth trillions, which will be implemented as part of the government's spending push in the infrastructure sector. But given the revenue constraints and strained banks' loan books, funding the infrastructure projects may prove to be a challenge. And hence, experts believe that Sitharaman may also announce a dedicated development financial institution to facilitate financing greenfield infrastructure projects. Industry experts are expecting more measures for the ruling government's flagship Atmanirbhar Bharat Abhiyan. India is also considering hiking import duties by 5 to 10% on more than 50 items, including smartphones, electronic components and appliances. The move to increase import duties is part of Modi's Self-Reliant India campaign that aims to promote and support domestic manufacturing. A further impetus to the Make in India program is also likely.
And today we are joined by Mr. Shashank Srivastava. He is ED of Maruti Suzuki, India's largest car maker, to talk on his expectations from the budget. Good morning to Mr. Srivastava. First of all, well, your industry that contributes to 50% of the manufacturing for overall India. What is your expectation how Indian government is going to give any sop to this industry or not?
Yes, so as of now, the automobile industry post the pandemic has bounced back. We have seen a continuous month-on-month growth, which is a very positive sign. However, when we compare it with the year previous to last one, then it is still way off, is almost 30% of those peaks. And therefore, the industry would expect some sort of support for the long-term future. And I think there are a couple of actions that the government can do. So when there was a drop in demand, as I just said, 33% off the highs even today, it was largely because of the cost of acquisition, and the industry has been asking government to somehow help on bringing the cost of acquisition down, which means that either a GST reduction or a tax reduction in form of insurance or road tax or registration tax, etc. But I think the government has this particular year has a lot of expenditure to be done on the social sector, as also, there are fiscal constraints. So I am not really expecting cuts in GST. However, the government can, on the demand side, build something for the auto industry like a scrappage policy, which everybody has been talking about, which should help in spurring the demand and also reducing the polluting vehicles on the road, and thereby saving on the oil fuel imports as well. So I think a couple of things which the government can do, and out of the box thinking, if somebody might think from the demand perspective, maybe allowing the interest on car loans to be deductible for the purpose of income tax calculation, as also depreciation being allowed to the private consumers as well, and the accelerated depreciation which was being allowed for the corporates to continue for the next year as well. These are some of the things which the government can do. Yeah,
Mr. Srivastava, also a lot of focus it is going to now go to EVs, electronic vehicles, and also green vehicles. On that, do you expect anything that government will announce some sort so that now the sale of EVs and other green cars and two-wheelers it is promoted?
Yeah, so EVs, everybody agrees, is finally going to be, both from the perspective of running cost as also from the environment perspective, will be adopted in a large way going forward. But right at the moment, there are constraints for the EVs to actually grow in markets, not only in India, but across the world. The cost of acquisition for the battery-powered vehicles is extremely high, as also the charging infrastructure is very limited in India, and there is the range anxiety from the consumer's perspective. So I think if the best way to go forward is through the support to be given to alternate fuel technologies like CNG, and also to the hybrid technology, because hybrid powertrains and the EV powertrains have a lot of common component. So you do require a lot of volumes to build the localization, which would ultimately bring the cost of EVs down. So I would expect some support in the form of some subsidy for the hybrid vehicles, as also for the alternate fuel vehicles like the CNG.
Right. Thank you, Mr. Srivastava, for joining us this morning. Over to you, Priyanka.
All right, thank you, Sumit. Now we have another guest joining us on this broadcast to decode the budget and its expectations. Joining us live from Mumbai is now Andrew Holland, the CEO of Avendus Capital. Andrew, welcome to WION World is One. Now, we are just a short while away from the budget announcement. Now, India is positioning itself as a strong manufacturing hub against China. So what does the country need to do to attract foreign investment and appear appealing as a huge manufacturing hub?
I'm not sure there's so much you can do within the budget to do that. I think there's two factors which are playing in India's favour. One obviously was that trade war between the US and China, and COVID is obviously will have corporates having to look at diversifying their operations outside of China. So India should be a beneficiary. Our tax rates are one of the lowest in Asia, and one of the things that the government's been doing, as we've all know, is to try and get this manufacturing hub through PLI. And if they can continue something like that within the budget, maybe expand the number of sectors, then that I think would be a good incentive for foreign companies to look at India. Because listen, at the end of the day, India and China are going to be the growth engines of Asia and for the world. So I think you're seeing a number of companies anyway starting to put down manufacturing bases. Tesla was the recent one to announce it. So all of this is good news. So just continuation of that, just keep incentivizing companies to come. Through tax and obviously fiscal help as well.
Right. Now, Andrew, tell us a little bit about what corporates, investors, and of course taxpayers are expecting from the Finance Minister.
I think we're all hoping from a tax perspective that we're not going to get any hikes, that's for sure. There is obviously kind of worries that there's going to be some kind of COVID tax, whether that will come through the markets or it'll come through personal tax, don't know. But the taxpayers, I think, has been heavily hit over the last 2 to 3 years, and therefore I would hope that we don't see any further tax rates. I think that would be a negative seen by the market. Anything to do with the markets itself with tax would be a negative, and if it's going to hit the spending power just at a time when you want people out there spending. Would obviously be harmful as well in terms of the economic recovery. So I think the market would not take any tax increases very warmly at all.
Right. Andrew, my final question for you. Now, India has shown signs of an economic recovery recently. So what does this budget need to offer to some key sectors to help sustain this recovery in the long run?
I just think we need to do more of the same. I think, the Finance Minister over the course of last year came out with many different programs. I think the continuation of those, maybe adding some sectors in the PLI, to help those in terms of attracting investment going forward. And obviously, infrastructure expenditure, which will have a multiplier effect, both on jobs, but on the economy, is really what we're after. I don't think we're after, I know that it's been said that, it's a budget like never before. Let's hope it's a positive one, which will continue what we've been seeing in this recovery and continue that.
Right. Absolutely. All right, Andrew, thank you so much for all your insights and thank you for joining us on this broadcast. Now, still with us on this broadcast in the news studio is, of course, Gautam Chikharmani, the Vice President of the Observer Research Foundation. Gautam, my question to you, now this is a budget framed when the economy, of course, is growing at 8% and it gives the Finance Minister the freedom to present a bold budget. So will this be a bold budget or not?
I don't know how bold is defined, but this will be a budget where a whole lot of spending will happen. I hope it's a budget which sort of invests, or to put it a little crudely, takes a call on growth.
Right.
It should be a growth-inducing budget. And from all the discussions that have happened, I think that growth will now come. It will be triggered by government spending. In about 4 to 6 months' time, private spending will then follow. And I think that is where we will then finally reach some form of a growth equilibrium. We are already looking at high growth rates, highest in the world. But to reach that as a certainty or as a more sustainable growth rate, I think this budget should make the investments in growth. It should take a call on growth. It should forget about other things like fiscal deficit. Let the fiscal deficit be breached because inflation is under control. So the danger with fiscal deficit breaching is that inflation rises and that creates, among other things such as hurting the poor, a political issue.
Right.
So I believe inflation is under control. It's likely to remain under control. Also, there is a band that RBI has 2 to 6%. Inflation will be controlled. Given that, if the government can go all out for growth, it should just gamble on growth and more growth.
Right. Absolutely. All right, Gautam, we'll continue our discussion momentarily. Let's give our viewers some more information about the expected budget. Now, at a time when the West is struggling with the second wave of infections, economic activities in India are likely to gather momentum as the vaccination drive gains traction. As the country recovers from COVID-19 and one of its worst years as an economy, growth is now estimated to contract by 7.7% in the current financial year. While in the next fiscal, a robust 11% GDP growth is estimated in an assessment of growth prospects of the Indian economy. 2020 was the second year in a row when foreign institutional investors' inflows into Indian equities were the highest among emerging markets. Indian equities received more than $23 billion from foreign institutional investors in 2020. Most Asian and emerging markets, in fact, witnessed outflows in the year gone by. And according to the economic survey tabled last week in Parliament, India was the only country among emerging markets to receive equity inflows from foreign portfolio investors in 2020. The country attracted $30 billion in the first 9 months of the year alone. With significant declines in COVID-19 cases across the country, hopes are rising for a strong economic recovery and earnings growth in the coming years. The case for India's growth is now getting stronger with improved exports of drugs and pharma, software and agriculture as well. The Indian pharma in particular could potentially be the pharmacy of the world. India is also expected to witness a current account surplus during this financial year after a gap of 17 years. Public spending could be another boost to the ailing economy according to the economic survey. The government spending to its maximum level can revive both private consumption and also attract private investments. That said, a massive government-driven spending effort can be expected in the budget. The government has already declared massive infrastructure boosting packages in the last 10 months. Meanwhile, according to the International Labour Organization report, 81 million jobs have been lost in the Asia-Pacific region due to the widespread upheaval. The situation is relatively acute in India. Given the persistently high domestic unemployment, the creation of jobs and revival of small businesses is now extremely significant for the government. Now, Gautam Shikharmani is still with us. Gautam, my next question for you. What can taxpayers expect from this budget? What will help them kind of beat this pandemic and come out on the other side?
I think tax, if she lets it, doesn't touch tax, and I don't think she will touch, because reducing it is counterproductive, increasing it is counterproductive. She may just not touch taxes at all.
Right.
If anything on the tax front, I think she, as I said earlier, she should rationalize it, come back to Chidambaram's and all the ministers that have followed. We had reached an equilibrium of 3 tax slabs until last budget. And I think that we have to come back to that thing. Complicating the issue in terms of which tax applies to you out of 11 slabs, and whether you want the old one or the new one is a needless complication. I don't think anybody wants it. Keep the taxes simple. If you can reduce them, fine, we'll be happy. But if you don't reduce them, we will understand that this is a tough year. But just remove all the noise around taxing. And why should paying taxes be such a taxing activity?
Right.
Make it easy, make it friendly, make it relaxed, and make it simple.
Absolutely. Sumit, coming to you, I'd like to ask you a question. What are some of the sectors that need immediate attention? Let's start with automobiles. What can be done in the budget to make that sector happy?
Well, absolutely. As we heard Mr. Srivastava saying, GST cut is something which is required, but they don't expect that to happen. Overall, they actually want that to happen, but they know that fiscal constraints are with the government. On the other hand, scrappage policy is something they have been long waiting for. Well, scrappage policy is something that will provide an alternative to the buyers, so that they go to showroom, give their old car for scrappage, get something in return. That used to be known for cash for clunker scheme in Europe. That came in 2008 and 9 after the big Lehman Brothers crisis. European governments, economies, they wanted to give boost to their automobile sector. They started cash for clunker scheme there. In India, they want something like that, scrappage policy, so that a buyer of a car or any automobile, they go to the showroom, give their old car or two-wheeler for scrappage, and get a certificate or some cash reward in return and buy the new. So this is going to incentivize the overall automobile manufacturing and selling. On the other hand, well, yes, the other sectors that require immediate attention are tourism. Well, that's something which is clearly in very bad shape. We all know the reasons behind it. Aviation is one such sector which is in really bad shape. So coming from there, well, yes, real estate was something that was in doldrums earlier. Now that's also opening up a bit. Yes, there are some green shoots emerging there, but going forward, real estate has to be there, because a lot of employment comes in the real estate. It's in the top 3 employment generation sector in the country. So these are the sectors that require immediate attention, and something has to be done to bring them back to the growth path.
Absolutely, that's the hope now. Now, the global economic revival hinges on how India performs in the next few quarters. So this budget is being closely watched around the world as of now. The Indian Prime Minister Narendra Modi, during his Davos address, talked about the need to keep reforming the Indian economy to try and move up the ease of doing business rankings. The budget is expected to unveil policies along those very lines. This includes streamlining labour laws and improving the access to resources like electricity. This budget presents an opportunity for India to draw away investors from an opaque Chinese market and possibly place itself at the center of a new supply chain. The likes of Japan and South Korea have already moved in this very direction. This budget is an opportunity for India to do the same. The focus will, of course, be on production-linked incentives, or PLIs. According to Credit Suisse, the PLI schemes could contribute about 1.7% to the GDP. In Washington, the new Biden White House, of course, will be watching the budget closely. Analysts expect the new president to roll back the Trump-era taxes. Plus, there will be more predictability in America's policy under Joe Biden. The fiscal stimulus will also help put money in the pockets of the average Indian, thereby bolstering one of the world's largest middle classes. India remains a huge market for multinational producers, and they will be looking at how India clears and charts its recovery. The world had a dire forecast for India's COVID-19 outbreak, but the country has beaten the odds and is now leading the global vaccination drive. WION World is now available in your country. Download the app now and get all the news updates on the move.